Use smart money concepts when trading the financial markets. So I just want to break down a trade that I did take live. Okay, so starting things off here, you initially want a directional bias, and for that a 50 simple moving average is a very good indicator that will do so. Okay, that'll give you your direction. You can see here what we want to see is this indicator start to curl to the upside. We want to see a fairly steep gradient on this moving average. Just indicates that there's strong momentum to the upside. That's all that indicator is used for, nothing more. Okay, just a directional bias. And then let's get into the actual naked price action, and that's really where we can indicate where we're going to enter and exit the trades. Okay, so starting things off, just to break this down in raw naked price action, you can see here we have an impulse to the upside followed by a correction. There's sort of two candles pulling back there before then ultimately pushing back to the upside. Okay, so what we have here, we have a break of structure. Okay, so we can mark that on by a boss. So a boss to the upside indicates we've broke structure to the upside. Okay, once we have a boss, we know we have a guarded low. Okay, this is the most recent lower high before price then goes ahead and breaks structure. Okay, so now that we've seen the break, we can then mark our guarded low. Okay, and what basically the guarded low is the extreme supply on where we want to be entering and exiting trades. Okay, so now that we've marked on our boss and guarded low, we can then set our pending orders and we can start preparing ourselves in order to look for entries. Okay, so what we would want to see is a pullback to at least the 50% of this extreme supply. And what I mean by that is the last down candle. Okay, so the open of that candle all the way down to the low, we want to see price come at least to 50% of that extreme supply. Okay, that indicates to us that we're getting an extremely good value, we're getting a great price in order to look for this continuation on this long trend. Okay, so clearly we're in a bullish market. You can see we've set a higher high, higher low, higher high. Okay, so we're now looking for a pullback into our extreme supply to where we can then look for a valid long trade. Okay, so we're just looking for this pullback now. Okay, and price starts to come in. Okay, so you can see price is corrected into our extreme supply. We can now mark on here what this is. This is our liquidity. Okay, so we're looking to target at least our liquidity. If not, we're looking for further continuations since this is a trend following strategy. Okay, so now we've identified we've got a high, higher low, higher high. We're indicating a pullback into our extreme supply. Okay, and we're looking for a rejection off of our extreme supply. And when we're looking for rejections, we want to see at least a 50% rejection on that candle, which you can see we definitely get there. Okay, so that's more than enough for me to enter this long trade. So we'd enter on the close of this candle. Okay, stop loss goes a couple pips below our guarded low. So you can see it's 5.5 pips to the guarded low. Okay, so 5.5 up to 7.5, just round that up to 8 pips. Okay, you've got an 8 pip stop loss. That gives the trade a little bit of room. We know if we break below this guarded low, the trade is invalid, the trend is broken, we don't want to be in this trade. So we've got a very logical stop loss. Okay, and then we're just going to play this trade out. Okay, so you can see price initially came down a little bit more, grabbed some more orders from this extreme supply. That's fair enough. We gave the trade a little bit of room to play out. Stop loss was intact. Okay, we are of course targeting our liquidity, which is up to the high here, and continuation. Okay, so you can see this trade alone did a solid 6.28 RR. So that's, if you risk 1% on your trade, you would have made 6.28%, and that's of course the maximum amount that you could have made on this trade. Okay, and that's how you use smart money concepts in order to execute on in the financial markets. Okay.